All right, joining me is Dave LaValle, Global Head of ETFs at Grayscale, who, of course, is one of the world's leading digital asset fund managers, currently nearly $30 billion in assets under management. That includes a number of publicly traded crypto trusts. So these are private placement vehicles, but they're accessible via over-the-counter trading. They also have strictly private crypto funds. And then on the ETF side, which is where we will be focusing, I would say for the most part today, they're now up to 8 ETFs led by the Grayscale Bitcoin Trust, ticker GBTC. But Dave, it is always a pleasure. Thank you for joining me.
You know, so many times I've come on, Nate, and we've been talking about, how are we going to get this Bitcoin ETF launched? It really is great to actually talk about all of the success that we're now having. In light of all the anticipation that you and I have talked about for so many years. So it's great. It's great to be here. It's always great to be here. Thank you.
I love that. And actually, why don't we just start right there? Because we do have spot Bitcoin ETFs, of course, trading in the wild now.
Yeah.
That's been, about 16 months
Yeah.
since launch. And I was looking this morning, I show over $5.5 billion has flowed into the category just this year.
Yeah.
And if you look at the category overall, it's now about $110+ billion ETF category.
Yeah, it's amazing.
And so to start, I'd love to just hear what you're seeing or what you're hearing in conversations with clients around adoption at this point, again, given that we're 16 months in.
Yeah, I mean, the Bitcoin ETF story is the greatest success story in the history of ETFs. And I can wax on and on about how exciting it has been, but as an ETF geek, you're an ETF geek, I'm an ETF geek, all the anticipation was actually, surpassed in terms of the commercial success. And that's not always the case in ETFs. So that's been super exciting. I think that when we talk about ETFs, we oftentimes talk about the democratization of an asset class, and that typically has been, an institutional exposure that has then, kind of gravitated towards retail. And in this case, we had this kind of funny, and unique situation of kind of a barbell approach, which early adopters of Bitcoin were, self-directed enthusiasts, and then some of the smartest institutions in the world. And so what we've actually seen is kind of a compression, so to speak, towards the middle, that middle being, the advised market. And so largely the data that we can access about the flows that have come into the Bitcoin ETF cohort have all largely been self-directed, because there really actually hasn't been those platform approvals. And that's happening right now. So the engagement that we're having right now is largely with the wealth management platforms, some of the large wirehouses, as they're, diligencing the opportunity to add these Bitcoin ETPs, onto their platform. So last week we had over $30, billion in one room. That was a cross section of the market. Some of the wirehouses and the independent, RIAs and some of the independent platforms talking about some of the considerations about including, the Bitcoin ETF on their platform, specifically BTC. It's the lowest cost Bitcoin ETF in the market. It's 15 basis points. It's been flowing handsomely. The number 2 flowing Bitcoin ETP this year. Super exciting. But also, when our sales team is out in market, they're having conversations across the spectrum. They're talking to self-directed investors. They're talking to, the advised market. They're talking to, financial professionals. And then we're also having a lot of conversations with some institutions. And so the week prior, I was actually speaking at a conference with state treasurers. And these are, I think we had about $3 trillion in the room. And we had a dedicated, focused conversation about adding Bitcoin and Bitcoin exposure and potentially utilizing the ETFs to add Bitcoin exposure to state treasuries. And I mean, look, this is an incredible conversation. And once again, it's a great demonstration of the ETF, being a really, high quality access vehicle, for a new burgeoning asset class, used by everybody.
And in those conversations, I mean, is it primarily education oriented? Because we can obviously look to the performance of Bitcoin
Right.
and see what it's done historically. I think that's
Right.
an easy story. But is it really trying to help them understand how Bitcoin fits into a portfolio, and perhaps what the long-term investment thesis is. I'm just curious, like, what do those conversations entail?
If you were to sum up Grayscale's business model, it's meeting every investor wherever they are in that crypto journey and then delivering a financial product that meets their investment needs. And so in the context of, our Bitcoin ETF, BTC, and then, where the investor is, the wealth management platforms need a tremendous amount of education. And historically, and you and I have talked about this in the past, historically, financial professionals had an asymmetric downside risk if they were to, recommend, crypto or digital assets to their clients before it was on their platform. And this inflection point of the ETF coming to market has turned that asymmetric risk on its head. Financial professionals now have an asymmetric risk if they don't have a plan around crypto or they don't have the ability to have a conversation with their clients about crypto. And so let's just take a look at the 30 trillion in wealth in the advised market, and we'll split it into two camps. You're having conversations directly with advisors about, education around implementation strategies. Where does it fit in the client's portfolio? How much? Why? And kind of figuring out, somewhere in that 1% to 5% allocation is really where we land, where you kind of have, the best benefits, kind of added benefits of diversification into your portfolio, but also kind of optimizing for Sharpe ratios and risk return and things like that. And those are really exciting conversations because the advisors are, not, aptly armed with enough information to have high quality conversations with their clients. And their clients are coming to them and saying, hey, this Bitcoin ETF is out in market. Like, now I feel comfortable, making an allocation into my client's portfolio or into my portfolio. Help me as my financial advisor. So that's one side of the conversation. The other side of the conversation with the actual wealth management platforms holistically is a much more nuanced due diligence exercise, diligencing, us as an asset manager, diligencing, the operations of how the product is functioning. And largely those conversations have been really exciting for us because, we're just another asset manager like they are used to diligencing. So, obviously we have squeaky clean RIA, squeaky clean broker dealer, capital markets team, policies, procedures, compliance program, all those kind of things. And so these platforms are actually quite excited to see, walk into our front door, come to our offices, and they're like, wow, this looks exactly like every other asset manager. We have the infrastructure, we have an institutional quality business, and we've built this thing, here at Grayscale to be something that is really built for scale and to look and feel exactly like every other asset manager in the world. We just happen to be bringing regulated financial products to market that are holding crypto.
One of the things that I love that you said there, and I've talked a lot about this, is just the ability for wealth managers to have high quality conversations. So even if they're not at a point to where they're ready to allocate, you're going to get questions from clients and you need 100%. To be conversant around this. And, I've said, you look here recently, we now have some states that you mentioned state treasurers having conversations there. We have some actual examples now of states, adding digital assets. This isn't going away. No. And I just think it's important that at a bare minimum, you can have those conversations with clients, and clearly Grayscale is helping to facilitate that. So that's on the spot Bitcoin ETF side. I'm curious, what about spot Ether ETFs? Because I show there have actually been outflows overall this year, and it seems like demand hasn't quite been what some people were expecting. I would say, Dave, probably me included. And so I'm curious if you have any thoughts around Ether ETFs, which launched last July.
Yeah, it kind of, the Ethereum landscape kind of landed from a flow perspective where we anticipated it to land. Again, we're in this for more than a decade, and we've been having conversations about digital assets with clients for a very long time, and we see the reaction from kind of Bitcoin and then, Ethereum, and then further down kind of the cap spectrum. You mentioned it. We have 36 financial products, and a lot of them are not in traditional wrapped ETFs. These are in private funds that are quoted on the over-the-counter markets, kind of offering the opportunity to have regulated exposure in tokens that are, less familiar to mainstream. I always say there's like Bitcoin, and then there's everything else, and then if I was to like kind of put them into 3 or 4 buckets, I would say there's Bitcoin, there's stable coins, there's meme coins, and there's everything else, and the concept of Ethereum, despite the fact that it's the number two token by kind of market cap, it's a very difficult thing for clients to conceptualize. When you talk about Bitcoin as a digital store of value, fixed supply, increasing demand drivers, more acceptance, you don't have to be a macroeconomist to say, okay, more supply, fixed supply, more demand, price is going to go up and to the right. Like, it's a pretty simple concept. And the concept of a digital store of value is an easy thing for people to grasp onto and an easy thing for advisors to talk to their clients about. When you start talking about layer 2 protocols and you start talking about tokens and you start talking about, this is, crypto as more of a disruptive technology, it's a bigger leap for people to make, and it is confusing to them. And what I always talk about is the analogy that I use that kind of works the best for clients is talking about Ethereum as the operating system that we believe is going to be here to stay. And so this next wave of crypto, or this next iteration of the internet in a decentralized format, is going to offer the opportunity for people to create decentralized applications that need to plug into an operating platform. And that operating platform that has kind of the most dominance right now is Ethereum. And so I say, well, think about like a smartphone. Think about, if you were going to create an application that was going to work on a smartphone, you would have to code it to iOS and you would have to code it to Android. And, think about having the opportunity to invest directly in iOS or directly in Android. And, Ethereum is the iOS or the Android in that, example or in that analogy. And so the light bulbs start to kind of click when you have those type of references. But the next question is, well, how do you know that there's not going to be another, Ethereum or another Android? And, what about Solana? Solana's faster than Ethereum. And then what about Sui? And there's other layer 2 platforms. And so it becomes a more complicated conversation. And it's a difficult leap for investors to make because it's not as clear. And I calm the conversation because people get confused or concerned that there are, literally hundreds of thousands of tokens out there. And, my good friend Matt Hogan and I, who is, on your pod, we talk about it all the time. Tokens are like pieces of software. And if anytime you hear token, you replace that with software, then you can kind of conceptualize, well, there's going to be softwares that are successful and softwares that are not successful. The problem is, Nate, Bitcoin is very simple to understand, digital store of value. Ethereum is more like a piece of software, and it's harder to get a high level of conviction that that's going to win in the end. It's just a more difficult conceptual thing for people to accept that crypto is really a disruptive technology. We're trying to create financial products that are helpful in kind of parsing, this universe of tokens or this universe of software. And, we're, again, trying to, meet clients where they are and then take them on that journey and deliver regulated financial products that can help, make their investing decisions for them. You and I have talked a lot of times. Not every ETF issuer is created equally. Not every ETF product is created equally. So when you're dedicated to an asset class, it puts you in a position to have high quality conversations with your clients. And right now, after this inflection point of the ETF coming to market and 16 months later, we're having some really fruitful conversations and people are attentive at the table with us.
Putting aside the fact that Ether is more complicated to understand, it's a little more difficult for investors to get their head around. And then in thinking about the spot Ether ETFs, I would also say that, spot Bitcoin ETFs, they had a first mover advantage. So for maybe early adopters who wanted to allocate in a portfolio, perhaps they were more apt to look at spot Bitcoin ETFs first, and that stole a little bit of the oxygen, or sucked a little bit of the oxygen out of the room. But I'm curious, do you think the lack of staking has been a hindrance for spot Ether ETFs, or do you think that's been overblown? Because that's something that I've heard quite a bit.
So maybe. I think that, having a sophisticated understanding of, Ethereum being a proof of stake protocol, and that a proof of stake protocol essentially has, a yield to it, and that the Ethereum exchange traded products don't allow the opportunity for an investor in the Ethereum ETP to kind of receive that reward. So they're not getting the kind of full benefit of ownership in Ethereum, is probably a leap for the targeted audience that are really excited about being able to access crypto in an exchange traded product. So I don't think that's been a hindrance. Regardless, we think it is hugely important that the Ethereum ETP has staking incorporated into it. And 3 weeks ago, we were meeting. You saw, you pay attention to this stuff. You saw that we met with the crypto task force. This is all of public record, and if you're interested in this, you should take a look at the slides that we put forth because they were really well thought out. And we presented all the reasons why we think that Ethereum, can have staking and still be encapsulated in the ETP wrapper, and that it doesn't impair the ability for us as an asset manager to, be able to continue to operate the product with a high degree of efficiency and a high degree of tracking of the underlying asset, which is obviously what we sign up to do as an ETF issuer.
All right, since you opened the door here, I'm going to just barge in. You brought
Come
up
on,
meeting
Nate,
with the SEC.
You never shy away. Come on, it's fine.
Now we are going to get into the fun part of our conversation and talking about your engagement with the SEC and potential filings. Let's pull that thread a little bit more with staking and spot Ether ETFs. You mentioned that Grayscale did meet with the SEC Crypto Task Force a few weeks. And from my perspective, it seems like the key issue the SEC is trying to get comfortable with is how issuers will handle what I'll call the liquidity mismatch between the staked ETH and then the daily ETF creations and redemptions. Basically, that it takes some time to unstake ETH, but investors, or I should say authorized participants, they have the ability to redeem ETF shares on a daily basis.
Correct.
And you can certainly comment on that specifically if you'd like. But I also saw that perhaps there's some clarity needed from the IRS on how a grantor trust, which is what these spot Ether ETFs are, how that structure would handle staking revenue. So I don't know if you can comment on that at all.
So when you say a liquidity mismatch, I like to actually say a settlement mismatch. And so there's basically like two big rocks that we have to kind of move. But fortunately, and as with other kind of exposures that have come into the ETP wrapper, we can borrow from what we've learned in the past to inform us how to deal with something that we have as a problem today. So there's two things. One, that settlement mismatch, the potential for staked ETH to need to, have more time to be able to be delivered out in a redemption scenario relative to the kind of T+1 nature of, a redemption from an AP's perspective. So shares are going to settle in, 1 day. In a redemption, but the tokens will be more than 1 day. So there's kind of a settlement mismatch. Fortunately, we've seen that. I mean, we have senior loan products out in market that take 30, 60, 90, 120 days in some cases to settle. So the loans take, tens of days to settle, while the ETF shares are settling in 1 day. So we've seen this before. We've dealt with this before. Much of the way that we kind of presented to the SEC was in an informed way that says, hey, we're going to borrow from what we have learned in a subsection of the fixed income market, the loan market. And the second instance is that you essentially have a revenue stream or some sort of distribution stream that is unknown. And, look, we deal with that all the time as well. You have distributions or dividends coming off of an ETF that aren't going to be known ahead of time. And therefore, you have all sorts of rules and regulations that are subject to not only SEC approval, but the exchange approval to make sure you're kind of, explaining and, and publishing those distribution dates and record dates and settlement dates and the actual distribution dates as well. So these are two things that are a little bit complicated about incorporating staking into an Ethereum ETP. But aren't new to us. And we kind of presented that. The way that we see it is pretty simple. You're not going to stake or kind of lock up all of the Ethereum that is underlying your exchange traded product. And therefore, you have a portion of the fund that will be quite liquid. And so most of the call for liquidity, as you know, is going to be settled in trading the shares on exchange. And when there's an outsized call for liquidity, the marketplace utilizes this creation redemption mechanism to kind of, allow the ETF to grow or to shrink. And in a redemption scenario, we believe if you have enough of the Ethereum, the underlying Ethereum inside the Ethereum exchange traded product to be unstaked and therefore readily available, the redemption mechanism or the creation mechanism is not going to be impaired. And then we have some kind of waterfall scenarios of if there was kind of like outsized call for redemption, the way that we would be able to kind of take advantage of some credit facilities to to ensure that the investor is going to have the most fair shake in market. At the end of the day, in my 20 years of dealing with ETFs and engaging with the Division of Trading Markets at the SEC, the most important thing to focus on is to ensure that the intrinsic value of the underlying asset, that is the value of whatever the ETF is holding, doesn't persistently decouple from the ETF's value. And you want those things in lockstep. And the way you keep those things in lockstep is ensuring that you have a well-functioning creation redemption mechanism, which we do, and which has proven to work, with the Bitcoin ETPs and with the Ethereum ETPs, and we believe would be able to, continue to work really efficiently if you actually had staking in the Ethereum ETPs as well. Now, the second thing that you talked about was some of the IRS considerations. But listen, this is a totally different regulatory agency. So we got the SEC focusing on kind of the functional ability to kind of have this product trading in market with staking. And then you have ultimately what you said, kind of the grantor trust status. Now, one of the hallmarks of a grantor trust is it has pass-through tax status. The IRS just really hasn't been very clear on how staking and or the revenue that would be generated from staking and the tax status of that. And so, we're waiting for some of that clarity. But the truth is they're two separate regulatory agencies and they're two independent decisions. We would advocate for all of the clarity to happen both at the SEC and the IRS. But I'm not one to predict timing on either one of those things.
All right, if we put the IRS aside, because I hear what you're saying, we're talking about two different agencies here.
Right.
In thinking about the types of conversations Grayscale is having with the SEC, so we were just talking about staking and ETH ETFs. I want to ask you about some filings here in a moment, but can you tell us anything about how the SEC is handling crypto ETFs this year, perhaps versus Grayscale's past experiences, which I think have been pretty well documented. I mean, you filed and won a lawsuit against the SEC.
The smirk on your face, Nate, would suggest that we have an acrimonious relationship with the SEC. We have
I'm not suggesting that.
We have a long-standing history of working constructively with the SEC. We did have a disagreement on whether or not there should be a Bitcoin exchange-traded product in market. We settled that in the courts. We did, I think, ourselves, our investors, and the industry a real service to get that over the finish line. And now we have gotten back to what is at the core of our DNA, which is to work constructively with regulators to ensure we can bring high-quality investment products within the regulatory framework to market. With the administration change, I would say largely the way that I talk about the regulatory engagement, we went from a very unfavorable and very certain regulatory environment. People knew what they were going to get in engaging with the SEC in the Gensler era, to a much more favorable, but a little bit more uncertain regulatory environment. And that has put us in a position where we believe that we're going to have quite a favorable treatment. And that has led us to, I think what you were alluding to, which is, I don't know, we're probably 5x our activity. If you take a look at the products that we have launched, in our 40 Act suite, and then also the number of products that we have filed, largely with, a focus on digital, asset exposure and an exchange traded product wrapper. So, we think there's an opportunity to take advantage of this. And we think that, with Chair Atkins in place, he's, someone who really reveres the agency. He and his staff have, been really, pretty direct with us in terms of show us the rule that it fits in, and let's make sure it doesn't break any laws. And then let's put these products in market. So, I mean, obviously, as you know, when you file for a new novel product, there's a 19B4 process. So we have a number of 19B4s in market, and we're waiting for that 240-day clock to whittle down. And we're having really high quality conversations with the SEC. and seeking a path forward that really aligns with the principles of the SEC, which is investor protection, fair and orderly markets, and capital formation. And we approach every conversation with the SEC, including the one with the task force a few weeks ago, ensuring that we are adhering to those key principles. It's really important.
Regarding the filings out there, I know you can't speak directly to any of these, but if you
Right.
don't mind, let me just run through the spot crypto ETFs that I showed Grayscale has filed for at this point.
Go
So
for it.
I show the Grayscale digital large cap ETF. There's a Litecoin ETF, Solana, Dogecoin, XRP, Cardano, Hedera, Polkadot, an Avalanche ETF. And I believe that's all of them. It's very possible I missed something. You can correct me if I'm wrong. Honestly, Dave, I can't keep up anymore. But any general comments that you can offer on these filings?
Yeah, I mean, again, we work in partnership with the New York Stock Exchange. We've also, begun working with NASDAQ as well to work with their reg teams and their listing teams to put forth high quality arguments as to why we believe that these, tokens, these protocols should be brought to market, in an ETP wrapper. I think the question that I kind of get asked most is like, what's going to be the next one? Like, is Solana going to be the next, crypto ETF? And my answer to that is very data driven. The next 19B4 in market that is going to hit its kind of 240-day clock happens to be Grayscale's digital large cap fund. So, to oversimplify the strategy, it's essentially the top 5 tokens that are not stable coins and not memes. And that's a product that's been in market for a long time. It's been SEC reporting since I think 2021 or 2022. And this is currently trading on the over-the-counter markets. And we have applied to kind of uplist that product to become an exchange-traded product to trade on the New York Stock Exchange. That 240-day clock expires on July 2nd. And we have been having good conversations with the NYSE and with the SEC to get to a place where we think we can bring that product to market in an exchange-traded product wrapper. So we're excited about that. And I've long been on record saying that it's going to be a multi-token product that's next to market. But again, how many times have you heard me say, like, I quit my day job of predicting the SEC timing or what they're going to do a long while ago. So, yeah, but
I did too.
We're excited to keep on working with them. And you're right, the list of products in the cohort and filings that are out there, we have a tracker on it, and it continues to grow. But how exciting is that, Nate? Right?
One question I had, and this is maybe a little bit in the weeds, but Grayscale's product life cycle, which I think is pretty well known. You have this life cycle where there will first be a private placement, and then the trust trades over the counter, right? So you have public quotation, then there's SEC reporting, and then of course the final step, ideally, is there's an uplisting or a conversion to an ETF.
Right.
But with those filings I just mentioned, I think a few of those you're actually attempting to skip right to the ETF. Is that correct?
True. Yeah, that's correct.
Okay.
What I would tell you is back to our core, which is we want to bring crypto products to market within the regulatory permission that we are able to. Historically, you couldn't come straight to an ETF. And so we were really innovative in devising this kind of 4-phase life cycle, which I think has been really beneficial to a number of clients that were of the mindset and had the attitude that they wanted to incorporate crypto into their portfolios, wanted to incorporate crypto into their retirement accounts. We had a solution for them that was permitted by the SEC. Now we have, a different set of regulatory permissions. And so we have, chosen to bring some products to market, or at least to ask for permission to bring some products to market directly in an ETF wrapper. And so that's exciting for us. It's just a sign that, the regulatory environment continues to evolve. And as the regulatory environment evolves, we're going to continue to evolve and bringing these products to market. So it's exciting.
And on that note, and I think I know probably how you're going to answer this, but I think, I have to ask you, is there anything you can tell us about any prospective spot crypto ETFs that Grayscale might pursue?
No, I'm not really. I mean, listen, we're constantly, the beauty of being at Grayscale is that we have an incredible research team that spends all their time talking about interesting protocols and researching them and talking to the teams. And so, you might find me around here saying stock selection is dead, but token selection is alive. And there's a real opportunity to outperform. And so we're constantly focused on making sure that we're at the bleeding edge of where developer activity is, adoption rates, understanding the different protocols, profitability. These are metrics that actually exist in crypto that people don't know exist in crypto. Don't ask me a follow-up question, Nate, because I'll have to pull one of my research guys in here. I'm an ETF guy, but the point is we're constantly taking a look at the landscape and seeing where we can, take advantage of our expertise and bring high-quality products to market that we can, credibly say are going to track the underlying asset and, make our investors some money.
Besides the spot crypto ETF filings, I saw Grayscale recently filed for a software
Oh
ETF.
yeah,
And
yeah,
yeah, Dave, what I thought was interesting about that is, in addition to software companies that are involved in, say, cybersecurity or enterprise software solutions, this ETF would also have the ability to allocate to layer one or layer two protocols through
right,
ETFs. So,
right.
spot Ether ETFs would be the obvious example. And I love this because I've somewhat sarcastically, asked, when is Ether going to be added to the Nasdaq 100? Just because I see Ether, we were talking
Yeah,
about this earlier.
I know.
It's a technology, and so why
It
not
is.
treat it as a technology from an investment perspective? And so I like this approach that it looks like you're taking with a software ETF. It makes perfect sense to me. And again, I know you can't comment specifically on the filing itself, but can you talk about this framing of Ether alongside other software companies?
Yeah, it makes sense. I mean, if you were to take a look at, so now kind of like shifting over to kind of our 40 Act franchise, our kind of traditional ETF franchise. And, listen, we're reacting to what the clients are telling us that they want and need, and what advisors are telling us they want and need. And you have a conversation with a client about Bitcoin exposure, for example, and they say, I love the story, but I'm not ready for Bitcoin. And so we want to have kind of equity replication opportunities for them. So we have our miners product, and we also have our B Core product. BCOR is our Bitcoin on balance sheet product. So essentially, if you have 100 Bitcoin on your balance sheet, you are eligible to be included. So these are two global equity replications that have pretty high correlations to the underlying performance of Bitcoin that are wonderful things for our sales team to have in their bag when a client is like, I love the Bitcoin story, but I'm not quite ready to invest in the underlying token itself. Secondary use case for that is you have a conversation with the client. They're like, I love the Bitcoin story, but it's not available on my platform. And so typically these kind of global equity stories are available on platform. And therefore it gives clients an opportunity to kind of have that Bitcoin experience or that crypto experience without, without having to kind of invest in the underlying token directly. Second, we're hearing from people they want income. So we are trying to harness the benefit of volatility in the underlying asset of Bitcoin. And so we've launched a couple of options-based strategies. And so what better way to take advantage of volatility in Bitcoin than to sell options? Because you're essentially capturing that premium and selling that volatility. And that has created kind of Bitcoin with an income story. And so BTCC is at the money covered call strategy, annualized yield over 50%, which is a pretty exciting story. And then we also have a premium income version of that, which is kind of going to give you upside participation on the underlying asset in exchange for a little bit lower yield. That's right around 15% annualized yield. And then we have this kind of like segment of our 40 Act franchise we're calling Crypto Plus. Crypto Plus is kind of marrying different asset classes with digital assets, and you aptly described software as just that. These are leading software companies, and then marrying it with kind of Ethereum exposure, which therefore kind of gives a more wholesome picture of where we believe there's going to be leadership in software and growth in software. And as time goes on, and we have the opportunity to kind of expand on that strategy, and obviously, we have to get that through the SEC as well. We have high conviction on it. You'll be able to kind of have the opportunity to kind of experience an equity replication, an equity experience of software growth, also with a crypto software growth as well. We're super excited about our 40 Act franchise as well.
Well, Dave, I just love the fact you mentioned at the top, you and I have had numerous conversations over the years, and to be sitting here now and talking about things like, say, a Bitcoin covered call ETF or
No.
premium income ETF and some of the filings out there. I always said, Grayscale paved the regulatory path clearly for the spot crypto products.
Yeah.
And to now see where we're at, again, 16 months after launch, and to think about where we may be heading, I think is very exciting. Clearly, this is something that investors have a lot of interest at. So keep up the good work
Thanks.
on your end. I always appreciate you taking the time. I really enjoyed this conversation. So thank you for joining me.
Thank you. It's always a blast, Nate. You're the best.
That was Dave LaValle, Global Head of ETFs at Grayscale. As always, feel free to send me any questions or comments. You can do that at cryptoprimepodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit cryptoprimepodcast.com for more information.